Something is wrong with the American economy. We are being told two different stories at the exact same time. Story number one is that the economy is booming. The stock market is hitting all-time highs. Corporate profits are breaking records, and GDP numbers are stronger than they have been in years. But then there is story number two. We see massive layoffs at the most profitable companies in the world. Google, Amazon, UPS, and John Deere are cutting thousands of jobs. How can companies be making record profits and firing their workers at the same time? This is the question that keeps millions of Americans awake at night. If the economy is so good, why does my job feel so unsafe? If corporations are so rich, why are they shrinking their workforce? The mainstream media calls this corporate restructuring or trimming the fat. They tell you it is just a cycle. They tell you the jobs will come back when interest rates go down. But I am here to tell you the uncomfortable truth. These jobs are not coming back. We are not in a temporary recession of money. We are in a permanent recession of labor demand. What we are witnessing is not a cycle. It is a replacement. I call it the great replacement of the American worker. For the last 100 years, the economy was built on a simple deal. Companies needed humans to make products, move boxes, and count money. Labor was the most valuable asset a company had. But in 2025, that equation has changed. For the first time in history, technology has become cheaper and more reliable than human beings. The layoffs you are seeing today are not because companies are broke, it is because they have found a better employee. One that does not need health insurance, one that does not take sick days, one that does not need a pension. In this video, we are going to look at the cold, hard reality of what is happening inside Walmart, John Deere, and UPS. We are going to prove that automation and AI are the real drivers of this unemployment wave. But more importantly, we are going to talk about what this means for you. If labor is losing its value, how do you survive? How do you protect your retirement nest egg when the rules of the economy are being rewritten? This is not a video to scare you. This is a video to prepare you. Because the only way to survive the great replacement is to stop thinking like a worker and start thinking like an owner. The replacement in aisle 4. Let's start with the largest private employer in the United States, Walmart. For decades, Walmart was the safety net of the American job market. If the local factory closed, you could always get a job at Walmart. It wasn't glamorous, but it was a paycheck. But walk into a Walmart today and look around. What do you see? Or rather, what do you not see? You don't see cashiers. You see rows and rows of self-checkout machines. You see one stressed-out employee managing 10 registers at once. This is not an accident. This is a strategy. Walmart is systematically eliminating the entry-level retail job, but it goes deeper than the checkout lane. Behind the scenes, in the warehouses and fulfillment centers, the change is even more dramatic. Walmart has invested billions of dollars in automated supply chain technology. They have robots that can unload trucks, sort packages, and scan inventory faster than any human team ever could. Recently, Walmart announced layoffs in their corporate offices and fulfillment centers. They are cutting human jobs while spending record amounts on capital expenditure for technology. This is the smoking gun. They are trading payroll for software. They are trading people for robots. And here is the hard truth for everyone watching. A robot does not pay income tax. A robot does not buy groceries at the local store. A robot does not support the local economy. When Walmart replaces 1,000 workers with a multi-million-dollar automated system, the company becomes more profitable. Their stock price goes up. The shareholders are happy. But the town where those workers lived gets poorer. The tax base shrinks. The local economy collapses. This is the divergence I am talking about. The company wins, but the worker loses. And this model is being copied by every major retailer in the country. The job of moving things around is disappearing. And if you think this is only happening to low-skilled jobs, you need to see what is happening on the American farm. The machine on the farm. There is nothing more American than John Deere. The green tractor is a symbol of our agricultural heritage. But John Deere is no longer just a tractor company. It is a technology company. Recently, we saw headlines that John Deere is laying off workers in Iowa and Illinois and moving production to Mexico. On the surface, this looks like classic outsourcing, cheap labor replacing expensive American labor. But that is only half the story. The real story is what John Deere is building. They are building fully autonomous tractors. These are machines that can plow, plant, and harvest a field without a human driver in the cab. They are controlled by satellites and artificial intelligence. Think about what this means for the future of farming jobs. For generations, farming supported millions of families. It required skilled operators, mechanics, and laborers. But in the near future, a single person with an iPad will be able to manage a fleet of tractors across thousands of acres. The labor demand drops to near zero. So why is John Deere moving production to Mexico? Because they need to cut costs now to invest in the expensive technology of the future. They are shedding their legacy workforce to fund their robotic revolution. The workers in Iowa are not just losing their jobs to Mexican workers, they are losing their jobs to the future business model of the company. John Deere has calculated that the future of farming does not include human drivers. And if the future of farming has no drivers, and the future of retail has no cashiers, where does everyone go? You might say, well, I work in an office, I am a professional, I am safe. I have bad news for you. The great replacement is coming for the white-collar worker faster than anyone expected. The white-collar purge. Let's talk about UPS and Google. UPS is a logistics company. Google is a search company. They operate in completely different worlds. But they both did the exact same thing this year. They laid off thousands of middle managers and administrative staff. At UPS, they explicitly said that many of the 12,000 jobs cut were management positions, and the CEO dropped a bombshell that almost no one noticed. She said that as volume returns, these jobs are not coming back. Why? Because artificial intelligence has changed the way they work. In the past, you needed humans to plan delivery routes. You needed humans to forecast demand. You needed humans to schedule shifts and manage inventory. Today, AI can do all of that in seconds. An AI algorithm can optimize a delivery network better than a room full of logistics planners. It can predict shipping volumes with higher accuracy than a human analyst. So UPS doesn't need those 12,000 managers anymore. This is the white-collar purge. For 50 years, the path to the middle class was simple. Go to college, get a degree, get a job in a cubicle, pushing paper or managing spreadsheets. That was the safe route. But AI is the ultimate spreadsheet manager. AI can write reports, analyze data, code software, and handle customer service. Look at Google. They are cutting jobs in their core engineering and sales departments. Why would the smartest company in the world fire its engineers? Because their own AI tools make their remaining engineers twice as productive. If one engineer with AI can do the work of 3 engineers without AI, you don't need the other 2. This is a productivity boom for the corporation, but a disaster for the workforce. We are entering an era where companies can grow revenue without growing headcount. This destroys the link between corporate success and middle-class prosperity. The resonance point. I want to ask you a question that might make you feel uncomfortable. Think about the last time you called customer service for your bank, or your insurance company, or your internet provider. Did you talk to a human? Or did you talk to a voice bot that sounded surprisingly real? Did you find yourself shouting, "Representative," into the phone, desperate for a human connection? How did that make you feel? Did you feel valued as a customer? Or did you feel like a nuisance that was being managed by an algorithm? Write your answer in the comments. Tell me about your experience with this automated service. Because your frustration is the proof of what I am saying. Companies are willing to sacrifice your customer experience to save money on human labor. They have calculated that a frustrated customer is still cheaper than a human employee. The survival guide. So, here we are. The factories are automating. The stores are emptying of staff. The offices are being run by algorithms. It paints a bleak picture. If you are over 55, this is terrifying. You don't have time to go back to school and learn how to repair robots. You don't want to compete with a 20-year-old who uses AI faster than you can type. So, how do you survive the great replacement? The answer requires a shift in your mindset. You have to stop relying on labor income and start relying on capital income. Labor income is money you get paid for your time and effort. Capital income is money your money makes for you. In the age of AI, labor creates less value and capital creates more value. Why? Because the companies using AI are going to be incredibly profitable. Walmart, John Deere, Microsoft, Nvidia, these companies will generate massive cash flows because their labor costs are plummeting. If you are a worker at these companies, you are in trouble. But if you are an owner of these companies, you are in a position of power. This is why protecting your retirement nest egg is the most important job you have right now. Your 401k, your IRA, your savings. This is not just money for a rainy day. This is your life raft. This is the capital that will work for you when you can no longer work. But here is the danger. Most people have their retirement savings exposed to massive risks they don't understand. They are invested in set-it-and-forget-it funds that are heavy in companies that might be disrupted by this very change. Or they are sitting in cash, letting inflation eat away their purchasing power. To survive in 2025, you need a strategy that is defensive but opportunistic. You need to own the companies that own the robots, not the companies that employ the humans. You need to own assets that generate cash flow, like dividends and interest, because you can't rely on a salary increase. You need to bulletproof your portfolio against the volatility that comes when millions of people lose their jobs. Because make no mistake, when unemployment rises, the economy gets shaky, consumer spending drops, housing prices wobble. You cannot afford to have your life savings wiped out in a market crash right before you retire. The old rule of 60/40 stocks and bonds might not work in this new world. You need to look at assets that are essential: energy, healthcare, utilities, things that robots and humans both need. The new rules of money. The Great Replacement is not a conspiracy theory. It is a business plan. It is happening in the open, listed in the quarterly reports of every Fortune 500 company. They are telling us exactly what they are doing. They are building a future where they need fewer of us. This sounds harsh, but acknowledging it is the first step to survival. You cannot stop technological progress. You cannot force John Deere to hire humans instead of building robots. But you can position yourself on the right side of this transfer of wealth. You can ensure that your financial house is built on rock, not sand. The era of easy labor income is ending. The era of strategic capital management is beginning. You have worked hard for 40 years. You traded your labor for capital. Now, you must protect that capital with your life, because in the future, it is the only thing that will pay your bills. In my next video, I am going to give you the blueprint. I am going to break down the top 3 high-yield assets for retirees in 2025. I will show you specifically where to look for safe, reliable income that beats inflation and survives automation. We will talk about specific sectors and strategies that are immune to the robot takeover. This is the knowledge that separates the victims of the economy from the masters of the economy. Do not miss it. Hit the subscribe button and turn on notifications. The world is changing fast, but if we stay informed and stay prepared, we will not just survive, we will thrive. Thank you for watching.